Hello, this is the Chart Profit video. We're approaching 2.5 hours into the trading day, Friday 3rd of February. This from the pre-open today, looking at the E-mini S&P. Been watching this level down here, the 4-month point of control at 22.65 for support, and it appears that we've seen support at that major point of control, or 4-month point of control rather, which has been our first level support for a while now, and currently we're up from that level. We had minor resistance here at 22.81, which was the half range of the recent high, and I think we've exceeded that, printing above that today. Here's a current chart of the E-mini hourly chart, and you can see recently this being 22.65, the point of control, and 3 times we've approached that level but not really printed any time below it, so that's good support there. And we're up from that level. If we just look at the halfway point there at 22.81, which is this dotted line, and we've exceeded that today. Just looking out on the auction chart, we can see this point of control here at 22.65 was built through this period. Had some aggressive buying here, the green. Saw a decline back to that level earlier in the week, but we've held that support, and currently we're printing higher. A little concerned here from the pre-open, a little concerned about the sentiment. My version of the RIDEX assets ratio was higher yesterday to 12.15. That's the highest ratio since May 2015. Here's what that looks like with the actual indicator. We're now printing here. We've exceeded the December peak here, and that's the highest since back over here. You can see here, if I just isolate the bear fund assets that I follow, this level, an extreme low level of bear fund assets, lowest level I've seen for years, indicating very few retail bears in this data. Can't say the bulls are, or the bull fund assets are extreme. They're picking up. They're not as high as they were recently in December. Generally overall assets are pretty low, but the ratio hitting its highest level for months like this is usually a warning that upside may be limited at least. So we need to carefully watch the minor support levels, the minor points of control on the relevant charts, which we'll look at in a second. First of all, here's the public poll from AAII. Bulls percent was higher this week at 32.8%. That was up from the previous week's 31.6, which was a 12-week low. And bears percent hit a 13-week high this week at 34.2. So slightly more encouraging data from this poll. Sentiment not extreme here at all. Again, a different story in the Investors Intelligence poll. The bulls percent was higher here at 61.8. That's the highest bulls percentage since June 2014. So sentiment here starting to look a little overly optimistic. And Lipper US fund flows reported equity funds, including ETFs, this week. Inflows of 13.8 billion, which is a reasonable single week inflow. Has lifted the 4-week flow, but not to extreme levels. Pulse chart here, Pulse S&P holding up. We have green above zero here on the price momentum, which is trend up. Momentum's actually down. We're seeing lower readings here, albeit above zero. It'd be good to see that price momentum turning back up. The breadth stays green in here. Again, with the sentiment getting higher, we need to monitor for any breakdown in this chart. Let's quickly review the levels on the stock index ETFs. This is the Diamonds, Dow Jones ETF. 198.90 is the 3-month. We are currently printing up from that level. Price now back down here would be an indication of weakness. This is the Russell 2000 ETF IWM. We've called this a key chart, and the key level, which hasn't changed, is 136.70, which is here. Appears to be resistance today. This one just lagging a little. I'd prefer to see Russell 2000 above that resistance, printing time up here. So as the spider appears to be attempting to break out higher here, the Russell remains range bound. Key chart next week, key level here. We'll talk about this in the pre-open each day rather. Another level that will be worth monitoring next week is on the DAX chart, the German DAX index. The 3-month point of control has just migrated to this level here, 11,577, and hopefully that will provide support should it be tested. Again, just an indication of weakness if we see price back underneath that level. This is the Treasury Bond ETF, TLT. We know the big level, the major, migrated up from 117.15 a couple of weeks ago to 121.60. I'm just concerned the last 12 days we've spent below that level in a weak price location. We've just seen the 6 month migrate up to 119.88, and that's just some minor resistance here. Just basically data coming in or time being spent at that halfway point, as you can see there, between this low here in December and the subsequent high. That being minor resistance, if we see price above that, and then ideally for bonds above 120.160 would put this ETF in a much stronger price location. So I think simply because of this level and the importance of it and the fact that we're printing time below it, just keeps bonds here at the moment in a weak price location. And the inverse of this, if you like, for equities, if we see TLT printing time up here, I'll take that as a negative for equities at that point. Okay, GLD, the gold ETF, has moved into a stronger position just today and yesterday, printing above the halfway point here off this low, important low back in November to this high. We're now currently made it, and we're printing time above that level, and the longer we print time above that level, more likelihood we have of gold moving higher from here. So that's resistance overcome. The next level, the important one really, is the major point of control at 119.84, unless that shifts lower, of course. But that is now currently the resistance. Price up here would be strong price location. But we have improving situation for gold here, I think. USO, the oil ETF, just now currently printing above 1144, which is the major, which migrated recently up to 1144. We're currently printing just above that level. Clear high or low is often an indicator above that level, above a major point of control of strength. Haven't really seen that yet, so it's not a totally convincing looking chart. Looking now at the dollar index, we've seen the decline from this high a couple of months ago, rather a month ago, up here around 104, and we've talked about possibility of this being a top for the index. I had targets up here based on distribution patterns, as you know, and I don't see anything in the pattern so far since then to turn bullish on this chart. If it is in fact a top, we'll see this level being really attractive to price. What we'll do is we'll monitor the halfway point down from that high, and as it falls, of course, the halfway point will fall as well. Price back above a halfway is a first sign of strength from a top, but I'll also look for a minor point of control coming in here somewhere. I'll monitor that in the pre-open, but currently tempted to make the assumption this is a top of some degree here. This is the dollar yen. We're looking at a daily chart. I've squeezed it somewhat. If we look at the low back here in 2011 to the subsequent high, we had a halfway retracement down to here, which was support, which is good. Let me just zoom in on this section here, and this may give us a clue, the strength in the dollar. If we look at that high down to this low, and again we look at the halfway point in here, that's where we've appeared to have stalled, possibly found support. Price underneath that level would be a bit of a clue for us. That would indicate more weakness. We also have a 4 month in here, which has just emerged. So again, we could view this as a key chart. A couple of important levels here. Price under here would be something to note, I think, so we'll follow this as well in the pre-open. Another key chart is the pound dollar. We have this important level, 10-month point of control at 124.19, and we're currently holding above that level. Previously it was resistance here and here, and this pattern here of consolidation above a point of control is an indicator of strength, which may give us a clue here, read the dollar as well. Price back underneath that would immediately negate that assumption. The pound has sold off a little the last couple of days, but we're holding above that important level, and that's important to watch going into next week. And finally, the Australian dollar. These two levels we've been watching for months, a real band of support resistance here from these points of control. At this point I thought there was a possibility of a higher low and some real strength here, but we saw the chart pretty quickly move back into a position of weakness here, and then of course course we've seen the decline and the rally back, and now we are back above that level. So I'm looking for again for this higher low here, which would be, I think, something major to look for, a real pattern, and again a possibility of confirmation that the dollar may go weaker. So a lot of these charts referencing the dollar, I think, maybe kind of on the cusp of confirming that, but maybe not quite yet. We'll just monitor these charts, possibly in the pre-open each day next week. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.